Good evening, guys. Welcome once again to another video. And I'm pretty sure you must have watched my previous video, but also still stay tuned to listen to this one because we've got some pretty interesting knowledge to share today. So keep focused and don't take your eyes off the screen. Into it. I hope you stay to the end too because it's gonna be really cool. Because some secrets are gonna be revealed. So let's just keep watching. Now, this is the daily time frame. If you don't know what a time frame is, I would want you to talk to me on. I would like you to talk to me on WhatsApp. My phone number is down there. You can easily call me or chat me up. So that you can understand some little terminologies in trading. Anyways, now this is the daily time frame, which is each and every candle here took a day to form. Each and every candle took a day to form. So it opened at the beginning of the day and closed at the end of the day. Remember in our last video we talked about higher highs and higher lows. This is a high, this is another high, another high, another high. Okay, now today we are going to be talking about Wyckoff. Ever heard of Wyckoff? Yeah, I'm pretty sure many of you have not. Anyways, Wyckoff is a way of trading in which two things actually occur. There are two practical examples, or should I say categories, of Wyckoff. There are two categories of Wyckoff. Now, these two categories of Wyckoff are accumulation or distribution. Yes, accumulation or distribution. Now, an accumulation, under accumulation there's also re-accumulation. Under distribution there's also redistribution. But the main points are just to know is that there's accumulation and distribution. So, before a market starts trending down, remember we were saying when it makes a lower low from an uptrend, it's looking like it wants to go down. Now I just want to make you understand why it actually went down. It actually made that made it to go down. If you understand what I'm saying. So this market went this high, this high, this high, this high. You understand? It just keeps on going. This low, this low, this low, this low. You get? It keeps on up, moving farther than where it started. Now, the top here has a play at the top here, and it is because of why that this market started trending down. This particular yes place right here, that's actually the Wyckoff, and the Wyckoff which occurred was actually the distribution Wyckoff. The distribution category of Wyckoff. That was what occurred in the market over here. If you understand what I'm saying, please, I hope you understand what I'm saying. Anyways, let's just keep on talking about what we are talking about. If you don't understand some things, you can easily ask me questions. I'm very open to everybody, so don't forget to ask me questions. Anyways, this is just normal for every single time frame, both the daily, the 4 hours, the weekly, the monthly, but they have different ways of analyzing, obviously, but it's practically the same. Higher highs and lower lows. Simply that. Yes. Where Wyckoff comes into play is that when you see a market like this now, let's just say this market now, that has made this low, has made this high, which is higher than its previous high. So a higher high, a higher low. Why did we say this is a higher low? We say this is a higher low because its high has gone above the previous high. The minute this market goes up above this is termed as a higher low. Hope you understand. This is termed as a higher low. So higher, a high, a low, a low, a higher low. Now, before this market makes this higher low, from this high to this low, something called distribution. Reaccumulation. Reaccumulation occurs. Yes, that is what made this trend. Now, this reaccumulation which occurs, it's more clear and more defined on the lower time frames. Probably we'll go to the lower time frames to identify this reaccumulation for you guys to understand. Probably in another video, I don't know, so this video doesn't go too long. Anyways, this pullback from this high to this low, there is a reaccumulation at the bottom. What is a reaccumulation? A reaccumulation is a point in the market whereby once the reaccumulation forms, the market tends to go higher. You understand? After an uptrend, it's called reaccumulation. Is when the market is on a trend, it's an accumulation and starts going upwards. While a reaccumulation is when the market is already coming upwards. That is why confused accumulation, but it's sort of simple, but confuse yourself. So where was I? I was saying accumulation is when the market was coming down, makes an accumulation and starts going up. Reaccumulation is when the market is going up, makes an accumulation still and keeps on going up. While the distribution is when the market is coming up, makes a distribution and starts coming down. Or the market is coming down, now this is a redistribution, it's coming down, makes a redistribution and starts and keeps going down. So that's a redistribution. So this market was actually coming up. You understand? It came down, made its accumulation and starts going up. You understand? The same thing happens over here. This is not than reaccumulation, because the market was coming up, reaccumulation, and it keeps going up. How do you identify an accumulation or a distribution? I'm definitely going to get to that, probably not in this video, so just keep on watching. So I don't know if you can see these yellow lines. I'm going to talk about that later, but I just want you to know that they are called imbalance. They are very, very peculiar to every market and very, very useful if you know how to use them. So you can also search on that imbalance and get more idea about what I'm saying. So let's look at what is currently going on in the market, and probably we can analyze the distance at which it is going to move and it's going to move to. So let's just go to what is happening currently in the market. I'm really sorry for this delay. You know, we are using our mobile. So anyways, as you can see in the market right now, the market is in a channel. This is one trend, this is another trend. So those two trends, they are holding the market in the middle. If you can see it clearly, they are holding the market in the middle. After a strong push down, they are holding the market in the middle. The market broke above the trend, but now it has broken into the trend once more, and this time it comes to break into this channel. There is another trend line which made the market break the channel at first. Now this market has come back into that trend line which made it to break the channel at first, and right now it has broken through it. As you can see clearly, it has broken through it. Where do you think this market is going now? Like, left to you, do you think this market is going to start going up? Like, do you think it's going to just start reversing and start going up, or do you think it's going to keep on coming down? What's your suggestion? You can always say it on the comments. I'm here to listen, but then it's left for us to decide, because nobody knows where the market is going to go to. But my suggestion for this market is that it's going to want to visit these lows and these lows. It's definitely going to want to visit those lows. So how do we take this trade? Oh, I almost in another block. If you don't know what other blocks are, kindly talk to WhatsApp, or you paste whatever it is you know about on the comment. I'll be glad and be ready to answer you. So I believe there is another block here. You see it clearly just now. Anyways, the market had made a, if you don't know the market I'm talking about, this particular low made a lower low. If you can see it clearly, it broke this low. That's a structure point, but it didn't close below it. It just broke through it, like signaling some strength in the trend to come down, and it has brought the trend back to that place again. I want to see liquidity. I want to see liquidity here, which is going to be taken obviously down here. So there's a distribution over here. This distribution will be marked. Let me just quickly mark that out. Let me just quickly mark that out with a rectangle, a box. This distribution, let's just take from these highs to the lows. We already tested. Anyways, I wanted to go that the 50%, even if it's below, and this is about the 50% of it. So I want to see some liquidity and some liquidity grab, and I'm expecting those liquidity grab to fall to these areas. Yes, so let's just keep hoping and waiting for what the market brings to us. Always remember, the market is not predictive but reactive. Yeah, I know. I learned it from an experienced trader. We grow every day. No matter who you are, you will always have to grow. So take care and keep watching on gold spot US dollar. Let's see what's going to happen with my money. As you can see, $0.10 high. I don't know. Let's going to go to